Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Hey, welcome back to another episode of Where Should I Invest? I am Sarah Larby, and thanks for tuning in again this week. We've got an awesome guest, Mark Smith, who is also actually a fellow podcaster. So if you haven't had a chance to download his podcast, make sure to do that. We'll give you some information on how to reach out to him at the end. However, we have a great conversation about mindsets, losing it all, starting over, flipping wholesaling JVs, and tons of additional information. Mark actually shares his story about how he started and thought that you were either a landlord or a flipper when you first started out. And I actually thought the same thing, which is what we see from the news and from TV. He is a great real estate investor. He's got a great mindset as well. Super inspirational. I hope you enjoy this podcast. And by the way, if you haven't left a rating and a review yet, please do so on Apple Podcasts or Stitcher or wherever else you listen to these podcasts from. That would be awesome. And let's bring in Mark. Mark, welcome to the show. How are you?
I'm doing phenomenal. Thanks so much for having me on.
Absolutely. I'm really excited to have you on. I am a big fan of your podcast as well. And you had me on, and it was one of the most fun podcasts I've been on for a long time because you are asking the tough questions. You are like uncensored in the sense, right? So I really do like your podcast. It's kind of like that edge of, crossing that border versus not. And I love that stuff, right? So you're pushing your podcast to the edge. What's the podcast called for the people that want to check it out?
Well, first of all, I'm very flattered to hear that from yourself, Sarah, because I always look up to you and the things that you're doing. It's called the 7-2 Mindset Investor Podcast. So 7-2 is in the numerics, Mindset Investor Podcast. It's raw, it's real. I don't edit. So if I fall off a chair, it stays on. There's lots of F-bombs, and all I ask is my guests to be real because they can expect myself to be real. This journey of being an entrepreneur, especially with respect to real estate investing, it's not all of us singing around a campfire singing Kumbaya. Right. There's a lot of stuff that are happening. So it's important that we just not talk about the stuff, like the beautiful stuff, like saying, oh, look, we could retire, we can have this, we can have that. It's important that we talk about the real shit that actually happens behind the scenes.
Yeah, because it's not like the Instagram stuff. You don't see the downside as much, but I do want to talk about that. And maybe that's what we'll talk about on our show. But before we get into the content, can you give us an overview of, what it is that you do as a real estate investor, what your portfolio consists of, and your strategy?
Sure, absolutely. So it feels like I've been doing this forever, but I really haven't. And I think, so I really turned this into something I had to do back in, was it late fall of 2018 after hitting rock bottom? I did have a property I had in Chicago that while I lived there and moved back to Canada, and I was renting it out, but it was cash flowing like nobody's business, but I wasn't running like a business at all. Going through a relationship breakdown, there was a lot of stuff happening. And it wasn't until late 2018, I said, I need to get it back into real estate investing. Unfortunately, I did it like 99% of everyone else. You just do it the way you think you're supposed to be doing it. Maybe watch a couple of YouTube videos, and then you work your day job, you get the property, you find your down payment money. And then once you're done your day job, you go there, you slug it out, and then rinse and repeat. So I had no idea what, I honestly, I thought real estate investing was really two things. It was either you're a landlord or you do flips. That's
I thought the same thing too, because of the TV and the news, right? That's what you see. You don't see the other side of everything else and all the other strategies.
Absolutely. And it's like, so there was that aspect. So I went hard at it. I bought 4 properties within 8 months. And looking back at that, like, and just everything I was going through, it was gross, like just that stress. And it wasn't until I hit that wall with the bank. Most people hit it after, 5 years of doing something. I hit it in 8 months. And I'm like, what? That's not fair. Sarah Larby has all these properties. How come she can get properties and I can't, type of thing, right? And it wasn't until I seeked mentorship, and that's when the door just opened. And since that time, since January of this year, 15 properties, we're doing flips. We have a wholesale business. I still have my buy and holds, multiple JV partners. And just feel like I'm just getting started now.
Very cool. I mean, that's impressive because you've been only doing it for the last 2 years, and it sounds like you've scaled. So you've got 15 properties, you've got a wholesale business, you've got, a lot of other things going on. What was it? I mean, I know you said you hired a mentor and somebody to help you, but like, was there something specific that allowed you to really take that leap forward?
I've always believed in mentorship. I always have. And I'm lazy. So if there's someone else that's doing something, I'm going to fall off this chair here as I'm twisting here. And I just, I go to the meetups and so forth, and I just said there has to be a better way, and just started talking to people. And at that point, I just said, I need to compress time here. I could try to figure this out myself, but will I ever get there? And it's what's crazy though as well is there's so many people out there, myself included, that says, "Oh, I want to have $20,000 a month cash flow or $10,000 a month cash flow total, so I could retire." Well, it's like if each one of my properties is cash flowing $200 a month after I do the BRRRR, that's a crap ton of properties. And now if I'm doing JVs, now we got to split that watermelon or share that watermelon. So now I got to even more double up. So there has to be a different way. And I just said, I need to buy those answers instead of having to find those answers.
So that's really interesting. So what are some of those answers that you've uncovered? Because like you said, if you're just doing it as a BRRRR and in some markets, your $200 a month isn't going to go very far. What was the answer for you, or some of them?
Yeah. You know what? The biggest answer was, don't worry about the real estate. Don't worry about that aspect. Fix yourself first. Fix your mindset. That was the missing link. And when I look back, that was what was holding me back, Sarah. It was just my limiting beliefs about just everything and how everything was done, because my la land was, this is not HGTV. These are the only two ways. And I'm just slaving away and basically trading your time for money was the way I grew up, the way I understood it, and just the environment that I was in. So I actually had to hire mentors that I would actually pay to put me in pain. And what I mean by that, it was they would put me in pain to be uncomfortable so I could then grow. So I've been blessed that I have a numerous amount of coaches or mentors. And I'm so fond of mentorship that I've actually proclaimed that I will be investing $1 million on my mindset.
Very cool. I mean, I think that's important, right? I mean, I learned the hard way in the sense that, I didn't even know there were networking groups. I didn't know that there were people that actually taught this stuff. Like literally, my friend was Google, and then I got into the US podcasts and read a couple books, and then went ahead and did it. And then it wasn't until the third and fourth property that there's a lot more. And now I have mentors too, right? Because wherever you are in your stage or in your investing, there's always going to be somebody that's like 10 steps ahead or 20 steps ahead that can teach you even more things in a lot less time and more efficiently. So, I mean, if I would have hired somebody right when I started as well, I probably would have scaled faster and more efficiently and made less mistakes. What are some of the things that you look back before your mentors and you're like, oh crap, I can't believe I did this, that we can share with the audience so that maybe they can avoid that loophole or that issue?
Well, the biggest thing is the scarcity mindset. And, it's like, oh, there's a property. So you're basically holding your cards close to your chest and not seeking help from people because you're worried they're going to take it from you. So again, limiting beliefs. And that was just more of an issue with my own ego. So looking back, it was like, stop being such a, for the one person that may burn you, there's 100 other people that actually have their hand out. They want to help you. And that's what I find by attending a lot of these mastermind events or the networking events, is that there were so many people there that were willing to help. And if I could turn back the clock, I would say, get into these rooms early. Get into these rooms. I mean, I met you in a room. I mean, Alfonso, I mean, I met Matt McKeever in a room. In fact, I met Matt McKeever in your room. So, I mean, the fact of the matter is you have to get into these rooms. And I'm a firm believer that the smaller the room you're in is going to be inversely proportional to your success.
Yeah, absolutely. Well said.
Mhm.
Any other insights that you can share?
Sure. I mean, I was asked this question. I was actually on a podcast. I was a guest yesterday on someone else's podcast, and asked me, what three pieces of advice would I give my younger self? Uh, Number one would be get a mentor. Number two would be get a mentor. Number three would be get a mentor. Because if I would have done all that from day one, um, this would be it would be a different scene altogether. Now, I don't regret not getting a mentor soon enough, because you have to learn. You have to learn. Failure is a great teacher. But if I could go back, there'd be definitely an easier route to go.
Yeah, absolutely. And I want to go back to what you said in the beginning too. I mean, you would have avoided some of the original mistakes or scaled up faster. You know, what you're doing right now, I mean, at first it's incredible because you've done it in such a short amount of time, but you know, I do want to touch on reality versus Instagram, because I think that's a real thing. And of course, we're going to post our success on Instagram. Of course, we're going to post the projects, the before and after. But I think what a lot of people don't see is like the stress, the, you know, all the like little things that will happen where if you don't, and it goes back to mindset, if you don't have the right mindset, like that could eat you alive. Like if you're going to lose sleep over, you know, having a delay of 3 weeks, or, you know, there's so many things that go wrong, especially, you know, if you're doing conversions, or you're doing the BRRRR process, or you're doing, I mean, really, ultimately, if you're doing anything, there's always things that can go wrong. But can you touch on that at all?
Sure. Yeah, that's such a phenomenal question, and I love it, because I think a lot of people don't take a question like that so seriously, because it can be very cliche. I ask all my mentors this, and I'm sure if I were to be in front of a room with Tim Cook, Mark Zuckerberg, Bezos, all of them, and ask the same question: how many times do you fail? And they're going to say, we fail every day. They're taking risks every day. Um, and, you know, we all have this hope that, oh, we're going to do this BRRRR and the appraisal is going to come in, or we're buying this deal. It's a really good deal, but then we get our hands into it. But you won't know till you take that risk. Life's biggest risk is not taking one. And with, like, we are investors, and so there's a invested interest into these things. But it's like when someone buying stocks, for example, I mean, as long as at the end of the year the trend is green, not red, that's going to be the key thing. But you're right, you need to have that mindset in tune, and the mindset is, it has to be strong, because there are going to be surprises. There are going to be surprises, and you have to have that mental stamina to deal with them. Today, I was dealing with one. We know we had to get rid of our contractors at a project. We're looking at this thing, and we're going to have to probably sell this property at a loss on a flip. My old self would be like, oh my gosh, I got to go to the liquor store, and I can't believe this is happening to me.
Right.
But when I look at the bigger picture, and I'm like, well, for one that's going to lose money versus 3 or 4 that made money, at least I took the risk.
Yeah, absolutely. And you said it, like not ever, like you have to be ready for surprises. And I think you mentioned like appraisals not going well. I mean, like literally that's what the last 3 I've fought for the appraisals. And yes, it takes longer when you fight for them, but you don't always get exactly what the number you want, but there are some ways to do it. But I'll tell you, like that can be, you know, a surprise that you get if you know, hire the wrong contractor, or you decide that you want to self-manage the whole contracting job yourself. I'll tell you, like, every time I do that, I fire a lot of people. There's all, you know, or there's just people that you're like, you worked really well in one project. Like, what is your problem this time around? But there's always going to be that kind of stuff. And like, you know, that doesn't get posted on Instagram, should it? I mean, maybe I don't want to tarnish anyone's reputation necessarily. Like I have some really good contractors now, but I've fired a lot in my day. Like I've had contractors that, you know, were great in one property, and then they got into drugs, and then they did a horrible job on the other one. I had to fire them midway through and, you know, rehire. I mean, those are things that come with the opportunity that we create, the opportunity to leave that full-time job, you know. So in your case, I know you've only been investing for a couple of years, but are you also working full-time?
No, actually, I started on a medical leave back in March. Believe it or not, I mean, I was in high ticket sales for a medical device company. I actually sold ICU ventilators.
Interesting.
So actually, yeah. So during COVID and that kind of stuff.
Well, right now.
Yeah. So,
but
so I actually took a medical leave in March, and there was a lot of stuff going on. I think a lot of stuff just caught up with me. I am no longer employed. And so, but you know, this year has been very, very interesting for 2020. I think a lot of people in 2019 were looking for 2020. That was supposed to be the year for everyone.
Mm-hmm.
And I believe 2020 has been the year for everyone because it's the year of clarity. The year of clarity. 2020 is the year of vision. And either you had your shit in order or you didn't. And when COVID happened, it made people having to make a choice. They can either make a choice and either take care of themselves or figure stuff out, or they could take that choice and say, I'm a victim here. And that's exactly what happened for me in 2020 is I scaled in 2020. I didn't go and take, my and hide everything and hibernate. No, I said I need to go harder now, and that's what 2020 did. So even with not having a job and that kind of stuff, again, having a job is not the asset. Having the right property is not the asset. Having the money is not the asset. The asset's between people's ears. It's what's in your head. That's the asset. When someone wants to JV with you, Sarah, they're investing with Sarah Larby. They're not investing in that property because they know Sarah's going to take good care of them. There's integrity, and Sarah wants to win at all costs. You're the asset. So I just said, I need to become the asset. And hence why I've gone really deep with that.
That's really interesting. So anyone would have looked for another job and you're like, I'm just going to take this, I'm going to run with it, I'm going to make it happen. And here you are making it happen. And granted, there's going to be some properties that don't go as well as you were hoping. But like you said, if 3 others do really well and 1 other you got to take a bit of a loss on, I mean, I don't know, like that's life, right? Unfortunately. So for people that may be listening to this and maybe lost their job or don't have a, regular income, like what are some things that you did specifically to keep scaling and to keep acquiring and to still keep making profit, even though you didn't have a T4 income?
Sure. So it's not who you know, it's who knows you. That's what it comes down to. And I just alluded to the fact that when you start investing in yourself, you become the asset. People want a piece of that. They want that confidence. And in doing that, there's a lot of people out there that don't have confidence. So where that comes into play is a good opportunity could be a joint venture agreement or some sort of partnership with that. Number 2, it's your track record or street credibility. So maybe people do have a job and they don't have time to give up, but you do have time. So that's how you can structure some joint ventures, some strategic partnerships, some alliances. And that's basically how I went about doing my business. I just threw myself out there, and instead of scaling back, and I said, I'm going to go in deeper. So with my marketing, focusing on my relationship building, focusing on my mindset, hiring more mentors. So if anything, I started investing heavily. And I tell a lot of people this is that how can you expect someone to invest in you if you refuse to invest in yourself?
Yeah, absolutely. That's a great point. You can't, right?
It absolutely. That's the thing, right? I mean, Sarah, like I said, I'm blessed to be on here, but I pick and choose which podcasts I'm on, and I'm blessed I get an opportunity to do so. But I know when I'm speaking to you, it's going to be a very cool conversation because we're able to tap into these type of conversations.
We can have real conversations, like just the overall 30,000 foot view fluff. It doesn't help the listeners, right? It doesn't help people listening to this because and every podcast is going to be different and every conversation is going to be different. And I think it's just important to be real and to, hear, like, here is the stuff that you've been going through and here's how it helped you. And, that will help somebody else, which is awesome.
Absolutely. I mean, I've done podcasts with my partner, Zara, about, the things no one talks about, how does it strain relationships? If you have kids and you want to be a real estate investor, there's strain there. I had some amazing guests that actually shared that they were dealing with infertility as they were real estate investors. So I'm talking about some real stuff that no one wants to talk about. I mean, Jared Hope says it best. He once ripped down that veil that's out there saying, hey, this is all roses and everybody's saying, holding hands and kumbaya around a campfire. No, this is work.
There's definitely some sacrifices. I'll tell you some of the sacrifices that we made in the beginning. I mean, for me, it was a sacrifice of time of working, insane amount of hours for, 2, 3, 4 years. And in the beginning, it was living very frugally and not going on vacation for the first little while. Like there are always sacrifices that you make, and as you get into it and as you spend more time, I think, in real estate and you build that wealth, you don't need to make as many sacrifices. Do I go back now and say, wow, okay, well, the last 10 years, I mean, let's just call it, I've been investing officially for 7, but, a couple of years was trying to learn, was that a sacrifice that's well worth it? Absolutely. Because now I'm 36 and I can not have a job and I am working quote unquote, podcasting and write club stuff, 20 hours a week. I could have been working for 35 hours, or 35 years for 40 hours and just coasted by. And I'll tell you, the sacrifices were worth it. And yes, we didn't travel as much as maybe some of our friends did. And yes, we didn't maybe spend as much time having that much fun. But yeah, there are sacrifices, and those are the sacrifices that we made. And I'll tell you, like, it's not always easy on relationships because you're, not spending as much time maybe as you should be. So those are sacrifices that we made. What about you? Like, what were some of the sacrifices?
Yeah,
back?
The biggest sacrifice was to myself. I mean, I always talk about this. The most important relationship you have to have is with yourself. And I lost complete touch with that working for someone else, going through all the turmoil I went through. And this is prior to even early in my journey as a real estate investor. And I mean, I had a very high paying, like a well-paying job. I for other people on the outside, this guy had it set, but I didn't, because I was the poorest person in, like, I had to hold back my F-bomb. But the thing is, I was working for someone else and I wasn't aspiring to hit my dreams. Although the fairy tale was as I was, but I wasn't. And I think Tony Robbins says it best, is that success without fulfillment is failure. And I lived a life for 40 something years, 40 years of just, there was no fulfillment. And it was just, I was just going through the motions. And it was other people's fulfillment that was the check boxes, not my own. So having said that, the biggest sacrifices were to myself. I sacrificed my health. And it was compounded with the effect of what I was going through with, an expensive divorce and toxic relationships around me. So sacrificed and once you stop taking care of yourself, how do you expect to take care of other people? It sounds so cliche, but you can't do it. And as much as I tried being unselfish and trying to help other people, my glass was empty, and I was still trying to force things out to help people and living in someone else's reality, not my own reality. So those were a lot of the sacrifices up front. And it continued until I got mentorship. Like you'll find I'm always talking about mentorship, because as soon as you get to mentorship, it's like driving in the dark. If someone can imagine their GPS, their phone dies and they're driving a place they've never been in, back roads, and it's completely dark. They have no idea where they are. And all of a sudden their GPS turns on, and it's like this anxiety level just comes down, and now you know where you're going. And that's what allowed me for that. Because before it was, like you said, the strain on relationships, you're slugging away. It's always on your mind. Where's the money going to come in from? How are we going to do this? This reno is going sideways. It takes a toll. It takes a toll.
It does. And I mean, looking back at it, there's probably lots of things we could do differently, but, and it's hard, because I think a lot of people are experiencing, and especially in real estate investors, I'm just going to put it out there. It's like, it's ongoing, right? You go to work. So if you're working full time, you're going to work and then you're coming home, and sometimes it just consumes your mind and your brain. Don't let that happen to you. Right. And it goes back to your whole mindset piece, and finding things that you enjoy and enjoying the process along the way. Sometimes it's so goal driven, right? Oh, we got to get to the next one, and we got to get this, we got to get to that. And then you forget to enjoy the little things. You forget to enjoy, the hobbies that you have. So, and I see it a lot. And, hopefully, you don't sacrifice things that you can't repair. And, unfortunately that happens a lot. It happens a lot. And, there's nothing, it's just the reality. It's just the non-Instagram stuff, right? And a lot of people are sacrificing things. So don't make real estate your main priority.
Mm-hmm.
Figure out, because if you have wealth and you have money and you've got all this stuff, but you have no family, you've got no friends, you've, ruined your health, and what do you have left?
And you know what it comes down to? I think there's two things. Number one is burnout isn't the result of being tired or exhausted. It comes down from forgetting your why, forgetting why you're doing it in the first place. You just go through the motions. So someone that may start real estate investing may say, hey, this is my why. But then they get into it and it's all about the next deal. It's all about the next deal. And they haven't taken a step back and saying, why am I doing this in the first place?
Mm-hmm.
Okay. The second level to that is boredom. Boredom is a killer. And sometimes we're just in that motion again. Well, I got to go to this meetup. I have to do this meetup. I have to go to that meetup. And thirdly is going to be that scarcity mindset or FOMO, that I need to be part of everything. And you just need to be able to take, and it all comes back to your why of why you're doing this in the first place.
Yeah, as you're saying that, I'm just thinking of people that are like, I want to get like 500 properties or 1,000 properties or whatnot, but you know, why? So what is that going to bring you? Can you get the same with a lot less, right? And
Yeah.
oftentimes the answer is yes. And it's more about bragging rights, which probably isn't the greatest why.
No, it's not. Absolutely. I joke about this when someone tells me, oh, I want to have 100 doors. I'm like, okay, well, the guy at Home Depot actually has more doors than you. He sells more, like it, and I was guilty of it too, just because when I came in, I thought it was about the doors, and it was like this manhood thing where, and part of my expression here, it's like two men ripping down their pants saying who's is, what I mean, who's more manly, type of thing. It has nothing to do with that. It's not about the ego. Because someone can have 500 doors, but if they're losing money on every single one of those doors, is that someone you want to hire as a mentor?
Exactly.
Or would you have someone that has 10 doors and saying, hey, I'm cash flowing like $1,000 a property?
Yeah. Yeah, exactly. I mean, and some mortgage brokers, I mean, obviously they don't name names, but the mortgage broker I work with, like, she's like, there are some people that have many doors and a lot of them are just like scraping by because they bought in very, in very expensive areas with rents that don't cover everything. And, but versus somebody that might have a lot less. And like you said, they have strategies to bring in more cash flow. And it's not just all about cash flow too. Like, cash flow is super important. You have to have cash flow, but I'll tell you, I don't think my wealth was created with cash flow. It was created with time in the market and equity buildup through, appreciation and mortgage pay down over time. And then the cash flow, I'll tell you, your $200 going back to your $200 a month cash flow. Once your tenants turn over, this is why it's important, especially in places like Ontario, turn your tenants over, by screening them to ensure that they have goals to buy their own place, or, change some of those long-term rentals into some shorter term or medium-term rentals. You can up your cash flow quite dramatically. And there's always going to be different things you can do. You can do student rentals, you can do rent to own, you can do different things, but your $200 cash flow is not going to be your $200 cash flow forever. At some point in the future, you can actually repurpose that property. And I think that's where a lot of people are missing the ball. What do you think?
I agree. I look at my portfolio. Same thing. I mean, I have someone that's having a turnover here end of December. Some people would say, "Oh, wow, you got to find another tenant." I'm like, "Well, the nice thing is I can bump up the rent now, or two, I can make a pivot to Airbnb, and have. So I'm not going to be handcuffed by land and tenant board saying, "Oh, this person doesn't have to pay rent." But like, what is that for the N4 say again? I believe my tenant owes me this much money. It's like, no, you owe me this much money and pay it back. Like, just, whereas with an Airbnb or short-term rentals, it's a contract or whatever it is, and I'll get out.
Yeah.
So I'm looking at that. Like, I'm looking at my portfolio, and as I scale, is looking at taking my properties and getting a new investor that wants to come in and do a VTB.
Yeah. Right. I mean, that's a great strategy. Why not, right?
Why not? Exactly. Because the thing that we're after, Sarah, is it's our wealth. I'm sure for both of us, we define our wealth as how much time we get back.
Time is the big thing. The time and the freedom of time is why I think many of us do it, right? So that we're not tied to having to do something that we don't want to, but we're choosing to do things that we do want to, where we want, with who we want. I mean, that's the whole point, because we're going to be dead in less than 100 years.
Absolutely. So the one thing I always tell people is, like, we don't have time. Money is abundant. Deals are abundant. As much as people may believe they're so hard to find, they're there. But the one thing we don't get back is time. So do we stress our lives and because we want to compensate for something by saying we have 100 doors, but yet you have nothing to show for it in your personal life? Like,
Yeah.
why are we doing this?
It's not, the number of doors isn't as big of an important thing. I think really ultimately, I think it's just bragging rights. It's
Hmm.
people that are like, this is what I have, here's my experience. But behind closed doors, that person might be having to pay somebody to live there like $300-400 out of their pocket for that
Hmm.
property. So it's
Absolutely.
you know, it's not everything it's always seems like on the surface. And
Sure.
then just to go back to your Airbnb stuff, I mean, like those are the strategies. Like I'll tell you, if I didn't turn 6 of my units into short term or medium term, I wouldn't have the cash flow I would have needed.
Hmm.
And again, there's not just the short term, switch over. Like you have to be in decent markets to be able to do that with.
Sure.
But that really helps because your $200 cash flow can become a lot more by turning some of those units over, furnishing them, and renting them, on the, you know, whether it's a week at a time, a month at a time. Like we've got some people there that are there for 6 months at a time, but they're paying a premium because it's furnished and it's a company that's renting it. And now they're going to likely rent my other property as well. So, there's always little things that you can do to bring up your cash flow, but
Hmm.
you got to be creative with it.
It's all about creativity. I mean, these ones, I mean, the government wants to take their pound of flesh when you're doing like, if you're doing off your cash flow, if it's in your personal name, but if you do an
Mhm.
Airbnb, the taxation is gonna be different. Now, I'm not gonna get it. I'm not no accountant. My accountant tells me what to do, and so I pay the big bucks just because it allows me to keep more in my pocket. So
Yeah.
there's other advantages there, but the key word you said is creativity, especially in a market like in the way the market is, whether it's a hot market or hot market like it is right now, whether it's a cold market, whether it's because of COVID, doesn't matter what it is. It's not cash is king or cash is queen. It's creativity is king. Creativity is queen.
Mm-hmm. It is. I agree. And speaking of creativity, so when you mentioned that you wanted to do a VTB, and I think that's pretty creative. So what you're going to do is you're going to essentially have a property and you're going to be the VTB person. Is
Mhm.
that what I'm understanding? And then somebody else is going to come in, essentially buy that property from you. You're going to hold back a portion and you're going to get that finally passive income coming in every single month. Is that correct?
That's exactly right. So I act as a bank myself.
It's very creative.
Yeah, I actually, one of my properties I have is I have a VTB from someone else.
Mm-hmm.
It's all about leverage. It's a game of leverage, and I call it a game on purpose because that's how I look at it. And I mean, some of my Airbnb business, I've done an Airbnb rental. Why put 20% down on a property when I could just talk to someone in my network who's had trouble with tenants, doesn't want to deal with tenants? We both have a win-win situation saying, I'll pay the market rent. Let me run an Airbnb out of it. He gets his money, I get my money, and there's a vested interest, and I got to take care of his property. And he knows the property's gonna be taken care of.
Absolutely. Now, I'll tell you with Airbnb, not every short-term rental, but like they have their own insurance as well. I mean, so you're like, it's insured through your regular insurance. Obviously, let them know what you're doing, but then you've
Mm-hmm.
also got the Airbnb insurance. Like to me, that's even a better option
Yeah.
than to not have that insurance on top of it. But and that's interesting. So it's like a way for you to like rent something at like, let's just call it 2 grand, and you can make 4 or 5 a month or 6 a month on it, and
Mm-hmm.
you pocket the difference.
Yeah, it's funny because in this particular one I have, I'm paying like it's low rent. I'm paying $1,500 a month rent. Okay. But the Airbnb income on it is what, 2,300. So after I pay all that, pay my expenses, I'm getting the same amount of cash flow as I would have, but I don't have to come up with that 20 points upfront, and I
Hmm.
don't have to worry if there is a person that is not abiding by the rules. I call Airbnb and let them know to leave, or he or she to leave. If they don't, I call the police, and it's now trespassing. Whereas if it's in my own properties or if it's one of my buy and holds, I call the cops. They're saying, well, there's nothing we can do. It's their God-given right to be there without paying rent.
Yeah, I mean, obviously that like there's tons of pros. There's also some things to just watch out for, right? Not like your landlord may not be okay with doing that, so you've got to be very upfront and have that high
It has to be in
communication.
it's in my contract that this is the purpose. This is my intention. So
Hmm.
very clear. And the nice thing
Yeah.
is like it goes back to the what I said before. It's not who you know, but who knows you.
That's true. So
So
you're doing this with people that know you?
that's right.
Okay. No, that's good. I mean, and then the other thing I would just say is if ever, you know, you can no longer Airbnb it and I just want to make sure that people listening at home aren't like, oh, this is great. I'm going to go ahead and do this. Like there's downsides to everything. There's pros and cons to everything.
Absolutely.
So, you know, like just weigh the cons as well. So like some of the cons that I could just see is if you've got, you know, all of a sudden a city that decides that they don't want to do that anymore, well, you're kind of stuck in that rental agreement. Hopefully you're not stuck in like a 12-month agreement and you could do like a 60-day notice or something along those lines. But like, how do you have that set up?
Again, it's you do business with someone you know, like, and trust.
Mm-hmm.
And so our agreement is it was actually pretty sweet because I didn't have to come down with the last month's rent.
Okay.
We agreed to a minimum 6-month term,
Mm-hmm.
and it's month to month.
Okay.
And all he asked
if
for,
it doesn't work, then you just got to give them notice.
you just have to give him notice.
No, that's pretty good.
And it works well in a hot market.
Mm-hmm. So, I mean, as that landlord, I'd probably be like, if it was you that was renting it on Airbnb, I'd be like, give me a cut, like 20%, you know, or something.
Yeah, absolutely. And that was one of the options on the table.
Oh yeah.
But they weren't so sure about the whole Airbnb stuff. So I just said, okay, I'll just pay you the rent you want then. Because the plan was to go at a lower market rent or lower rent that was. And even this year, like, yeah, COVID happened and I had a poor month, but the poor month, maybe it was out of pocket, maybe $150. After that, it's gone off. It's taken off.
Where are these properties? Do you mind if I ask?
Yeah, and downtown London.
Okay. Yeah, I mean, so like my properties too, they were pretty full. Like there was a little bit of time in the beginning of COVID where things were a little bit uncertain when in Ford, where the government just banned all the short-term stuff. And then once that was lifted, I mean, everything got booked. Like I've got, even for my cottage right now, like I've got the summer already like starting to book, and people are booking early because they are not going anywhere this year. So
yeah.
And you know, in our Burlington place, I mean, we had some people from Thunder Bay. We had some people that were, I think a couple of people were quarantining as well, which whatever it is, what it is, you know, as long as you've got the protocols in place. But I think it is interesting, you know, in areas where you're not thinking tourists, there's always opportunities for short-term rentals, in my opinion, or medium-term rentals. Because think about, like, you know, if you're having your kitchen renovated and you want to, you know, you don't want to be living in dust for those 2 weeks or 4 weeks or whatever it is. Or if your house floods, you need a place to stay, insurance pays for it. Or if you've got a property that's not done being built, right? Or you've got a house that you sold and a house that you're going to move into, and there's a gap in between. Like, I think there's a lot of opportunities like that, you know, separate from the tourism industry, that we can tap into.
I agree. And what I'm finding too is if someone had just booked, had basically said to me, like, I don't want to stay at a hotel where every time I leave the room I have to wear a mask, and I just feel like I'm being confined again. Whereas if I could just stay at someone's house, I can go in and out as free as I want, and just, I'm like, hey, I never thought that way, but sure.
Well, especially if you go to a hotel and everything's closed and all the amenities you can't even utilize, like, really, what's the point? You might as well have your own space and your own kitchen and your own, you know, yard space. I mean, unless it's a condo, then it's different, but
Sure.
It makes sense. So what's next for you? I mean, you've obviously scaled really fast. You've got, you know, it sounds like you've got your mind in a good spot where you can, you know, get to your goals and do the right things. Like, what's next?
What's next? To continue investing in myself. So I'm on a mission, you know, to just continuously doing that. So whether it be having conversations like with you, Sarah, like that just spurs, that allows me to grow, really pushing on my comfort zones, taking more risks with what's out there. Like, I'll call them calculated risks. I'm not going to be, sloppy or irresponsible. You know, my business partner, his name is Alex Solga. So what we do is we have a wholesale business, and then we have a flip business as well, where we act as money partners. So active partners come in, they present us the deals, and we fund it, and then it's an equity split from there. So we're doing that, but just really staying laser focused on where we want to go. See, the thing is, Sarah, is I think a lot of people have these lofty goals, or they put these goals in front of them, which is fantastic. It's great to have that, but what are they doing every day to achieve those goals? We reverse engineer that. We say we do have some goals, but we can't control what the outcome, but we can control our daily actions. So if our daily actions are putting out a number of offers a day or certain KPIs per day, that's what we're doing on a day-to-day basis. And that's how we hold each other and hold the business accountable.
Awesome. I do want to ask you about the wholesale business and where that is. Are you focusing just on like the London market, or are you looking at other places as well?
Yeah, no. Yeah. So we have a team out in New Brunswick that's out there. We've done campaigns out there, southwestern Ontario. We have done, so it's not specific just to London. We've done like Windsor, Sarnia. We've done just breaking out right all the way to Kitchener, Waterloo, Cambridge, so we're just going to continue pushing that, whether it be on with our direct marketing campaigns.
Very
And really
cool.
with a call to action.
Can you add me to your buyers list, please?
Sure.
All
Absolutely.
Right. And for those listeners, though, where can they go if they want to be added to your buyers list?
You know what? The best way of getting a hold of me is just reach out to me on Instagram. So it's at 72 Mindset Investor. So Mindset Investor 72. And yeah, reach out. I'm sure the show notes will actually have my contact information. So absolutely.
Awesome. Mark, we can keep talking, forever because you're awesome. And I love the realness that we can talk. And the next part, though, of our podcast, because we do have to wrap it up, is the lightning round. So I'm going to ask you a series of 5 questions. You're going to give me the first answer that comes to mind. Are you ready?
Let's go.
All right. Question number 1. What is your favorite real estate investing book ever?
Money, People, Deal. Stefan
Right.
Arnold.
Number 2, if you do listen to podcasts, and I'm guessing you do because you have your own, what is your favorite podcast? Doesn't have to be real estate specific.
Oof. I listen to so many different ones. I don't necessarily have a favorite. I just, whatever I'm in the mood for. I'd have to pull up what I do is I actually will search the guest on there. So let's just say, for example, it's Seth Godin I'm interested. I'll just, whatever podcast he's on, I'll just go in. So,
Okay.
yeah. So I do I have a favorite podcast? We'll just say it's this podcast. How's that sound?
Sounds good. All right. Number 3, what do you do for fun aside from real estate investing?
My definition of fun now, I can't believe I'm saying this, is actually just sitting down with reading a book. I can't believe I'm saying this. Oh my gosh. Yeah. It's just sitting down, reading a book in my alone time.
What book are
That's
you
fun for
reading
me.
these days that you might want to recommend?
I'm actually reading The Alter Ego Effect right now, which is very remarkable. One of my favorite books of all time is The Power of the Subconscious Mind. And I just read that probably a few months ago. So yeah, that's my fun. Wow, I sound boring.
Well, you know what? I enjoy that too now. Now that we have some time out of the 9 to 5, I mean, it's actually great. I've read a few books right now. I'm reading Super Fans by Pat.
Yeah,
Flynn.
great book. Yeah,
which is really good. I just finished, what was it called? The Atomic Habits.
Just finished that myself last week. Yeah.
Nice. So that's it is important to feed your mind with positive stuff, especially with everything that's going on around us, right?
Mm-hmm.
Question number 4, if you lost all of your money, all of your assets tomorrow, how would you start again?
I'd be doing exactly what I'm doing right now. It's getting into rooms. Find a way to get in those rooms and just be hungry and learn and learn and learn. That's the best way to become anti-fragile, is to learn. That's exactly what I'd be doing.
All right, awesome. And last question, if somebody has $50,000 and they want to get started, how would you recommend they spend that money?
Mentorship. Always mentorship. Get a mentor.
All right, awesome. Mark, that was great. Where can the listeners reach out and find out more about you?
A number of ways. So on Instagram, it's at 72 Mindset Investor. Facebook, it's Mark Smith. The podcast, the 72 Mindset Investor podcast, and then my YouTube channel, which is the 72 Mindset Investor.
Very cool. Any final last words of advice?
Get a mentor.
All right, awesome.
I want to say thank you so much again for having me on here, Sarah. This was a treat.
Thank you, Mark. It was great having you on, and thanks for sharing all your insights.
Thank you.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?